Okay, midweek recap. Let's have a look at the chart this week. Mazzolini. Let's start from Monday. I'm just going to quickly read price action. So Monday London session, you can see price starts off in internal liquidity. You can see it takes 3 pins. Let me just get my cursor. So you can see price is at internal liquidity. Why? Because this is Asia high, this is Asia low. And you can see that price is in the middle. Internal liquidity. Cool. So price does a fake out. It does pretend to shoot up and rally as it would usually, but it turns around in shorts. Hindsight, of course, 100% accuracy. But when you do see this in the future, perhaps it would be good for you to wait for the fake out and then go with the true trend. Do you know what I mean? And if you were to, your entry, or the way I teach to trade, your entry would be here, this candle, 740, short, bang, 80 pips on GJ. That's easy. Okay, this must have been a New York session entry. Yeah, 12 o'clock. 12 o'clock London times, New York session entry. So we can see the high taken out. And then a short again to continue. You've already got sell side liquidity down here, so you could already have your shorts here. How many pips would that be? To be honest, from our entry candle, only would have been 31 pips. I mean, which is decent, but it's the risk to reward that wouldn't be best. Got my risk to reward, bang. Yeah, it's boring, it's rubbish. I would never do that. That would be an unprofitable risk management approach to trading. You want to have a 1 to 2 minimum in your playbook. Forgive me, I'm just going to sip some coffee. So you'd want a 1 to 2 minimum risk to reward, so that wouldn't work at all, for those who don't know. Tuesday, again, price is inside internal liquidity. So if price is in internal liquidity on a Tuesday, I do expect Tuesdays to rally. So what I'm going to do is look to see if Asia has bounced off any key levels of structure. So boom, where is Asia? Lovely. So if I'm looking at price, I can see the session low. So we're in a downtrend anyway. The session low of New York has been taken out during Asia. Boom, liquidity sweep. And then I can see price rallying up again. The only reason why I like it is because I can see a fair value gap here. Right here. I'll draw it out for you. Those who can't see it. So if I see a fair value gap here, then that gives me, it's more of like a confluence or an indicator that there's some support for price to move off it. So now that I've drawn the fair value gap out, if I look at price action, I can see price has respected it. So if I follow the way I like to enter my trades, I'm gonna have a look and say price just gone into the fair value gap, wicked, nice, Smart money reversal candle, 5:30. Then we've got another one here. To be honest, that increases the confidence. So I might enter off this if I'm gutsy. Like if I'm in a winning streak, do you know what I mean? I don't mind. Oopsie daisy. I don't mind taking the loss, sort of thing. Anyway, fair value gaps drawn. And then I've got my entry candle at 6:05 regardless. Know what I'm saying? And then again, like I said, price is always gonna be nice if you get in an entry for 80 pips. So if I say, all right, cool, we only watch price from 7 o'clock, that's fine, because you can see price does give us our entry candle right here. Oh, and this is where I marked it out and entered. And for our 80 pips, what's that, at around 11:40. Retraced a hell of a lot. But and then went through back again and tapped in for 12:55. Wednesday, you can see Wednesday's price action was bouncing off some lows here. So you can always say to yourself, right, cool, I'm waiting for a double bounce, even a triple. So you got 1 wick, 2 wick, 3 wick. You know that you can now respect price is, you can now identify that price is respecting this level. And then you're going to wait again for your FEG and then your entry. Wednesday, I wasn't actually trading this week that much. You can see I don't have any entries here. But your entry, I can see, boom, yeah. Nice, taking out some, okay, yesterday's close for that day. Okay, interesting. Thursday. Okay, let's have a look at Thursday. Thursday looks a bit mad because it does look choppy. In fact, I did upload a short saying that there was choppy price action, I think. So, let me have a look and see what the fundamentals are. For the 9th. I'm sure. No, from the 9th. Here we go. As you can tell, I'm techie. I'm doing this on my phone. Thursday. Okay, so we had PPI at what time? 12:30. Oh, and unemployment claims. So that's why I wasn't really liking price action or expectations. Especially when you look at the fundamentals. When you look at the numbers, the previous and forecast, not that far off. Previous and forecast, not that far off. Previous and forecast, not that far off. So when I see that, I expect price to not really move that much. When price has big diversions or like big differences, or big extremes, yeah, all these words are interchangeable. So like 1 and 10, that would be a big extreme. If you see a big number difference, that's when I'm expecting big price action. If it is close, then I'm expecting price to range. So I actually didn't trade Thursday, or wouldn't have at all, in fact. So yeah, students, look out for my reels, because my reels will actually show you whether I'm thinking it's a good trading environment or not. Yeah, have a look at my fundamentals on Friday, because that looks choppy as well. Okay. Forecast and previous, not that far away from each other, so I'm expecting something choppy during London. 2 p.m. with the New York session announcements, I'm expecting price to most probably do a fake out before the 2 p.m. announcement. Okay, let's have a look. So, London session, we can see Choppy. Yes. Oopsie daisy. This is all Choppy price action. So, moving to New York session. You've got so many pins to the highs. This is actually quite good, to be honest. Alright, do you want to see how I would have done this, yeah? Alright, let's have a look, let's go. Trying to do this as quick as possible because I actually don't have a lot of recording time. But you're done already. For the homework, I want it accurate. I want it bang on. $12 candle, FEGs, boom. 12 candles, no real FEGs for that session either, gosh. It's right here for the hourly. Wonder how it's gonna look on the chart. Today the booth is the mall. Alright, cool. 5-minute execution time frame. I want to draw out all of my levels, all of my labels rather. Boom. I can see them. So from 12 o'clock I'm looking for in the afternoon. That's gonna be our watch time. 12, boom, I'm waiting for the first FEG to be issued. I can see one here, bang. Oopsie daisy. Get that drawn across, and I'm going to drag it across here throughout the whole session. So after 3 o'clock. Now I'm waiting for my entries. Remember, I'm looking for smart money reversal, FEG, then entry, yeah? Cool, let's go. Remember, if you don't understand what I'm talking about, just message me and I'll just organize a time to have a live call with you and I'll explain everything with you. I'll break it all down. You can take notes from the live call, do you know what I mean? Alright, cool. Alright, so my smart money reversal is here because it's actually on the FEG, yeah? Entering off this is usually risky as puck, yeah? It's like 60% as opposed to the 80% that I like. Well, sorry, 40% as opposed to the 60% that I like. Look how many pips price this candle is taking out. Nasty. So no one's supposed to get in on this entry unless you're doing some swing trading, yeah? Swing trading entry, boom. But you can see that's a smart money reversal issued. Now I'm looking for my FEG. I can see one here. So this is a gap in price right here. So now, all I'm waiting for is an entry. Where is my entry candle? Do I see my entry? Do I see my entry? I've seen it. I've even seen two. Okay. The first one is here. my, oopsie daisy, let me drag that across. Get off my screen. And my second entry is here. What am I focusing on? I'm focusing on my engulfing candles. So, even looking at price, I can see that none of the trades were taken out initially, but price actually hardly rallied to my take profit, did it? So the first movement went down a couple of pips, 6.1, rallied up 10 pips, and then went down 44 pips before rallying back up to price, to entry. The second entry from here shot down again 43.4 pips before rallying back up. So Friday wasn't too popping. If we did take a trade off yesterday or off YC and wait and respect that as liquidity taken out on that side. Okay, it's not smart money reversal, the FEG. No, it's just nasty price action. It's a reversal and we have to accept it. Well, that's all, folks. That's the end of the week wrap up. Thank you for your time. Contact me if you don't understand what I'm talking about, or if you actually just want to add a few things that I'm talking about to your playbook.
Don't forget to like, comment, and subscribe.
Okay,